Okay, so I hope you guys can hear me. I hope you guys can hear me. And we've had some mixed reaction with the NFP news. Okay, so let me show you guys something. So we had some sort of mixed reaction news over here. Okay, so non-farm payroll, the previous was 315, and the forecast, so it was expected to reduce, which was 250,000. Now, if it had fallen below the 250,000, then we could have seen United States dollar drop massively. It came above the 263. So even though it reduced, it had a dovish reduction. Okay, there was nothing like a hawkish reduction. Now this NFP, so the drop was not hawkish, it was quite dovish. So I think that pushed the dollar up a little, but I'm still expecting the dollar to fall for some time before we start the big move up. Okay. And when you check the unemployment rate, the previous was 3.7. So this unemployment rate was very good, because that means that the unemployment rate reduced. Okay, so that was good for the United States economy. This one too was good, but even though it reduced, it was better than the forecast. In actual sense, it was supposed to reduce, but you see that the reduction was better than the forecast. That's why it went up a little. The unemployment rate also reduced, which was good for the dollar. The hourly earning remained static, or it was the same. The average hourly earnings year on year, it reduced drastically, which is not good for the dollar. Okay. Now, the same as the participation rate also reduced, which is also not good. The average weekly hours also was the same. Okay, so in actual sense, it was a mixed reaction. It was not good for the dollar, but it was not so hawkish. It was quite dovish. That means that you could see dollar push up with the news, and after the news, we could see some retracement of the dollar. And I think it is really showing on the chart. Okay, it's really showing on the chart. Now, what's happening over here? We still stand, for us, we are more of a swing, we do more of swing trading. We still stand with our move until we get a more reason why we should buy the dollar now. So what is happening is that, let me show you something over here. Okay, so I'm still expecting the dollar to fall. It's still within the range, okay? It's still within the ABC correction range. Now, what I'm expecting is that we still, from the higher time frame, we still remain, so on the weekly time frame, look at something. Now, we saw the dollar sell for some time at the D of the deep crab pattern formation over here. Okay, so we still saw it reduce or decline or fell around the 1.618. Now, this sell is not that enough. Now, I don't expect this candle to close bullish. Like, if it should close very bullish, like a strong bullish, then we could see it go up. But I'm expecting this one to still retrace down. Now, I'm expecting a zigzag correction, which should form an ABC correction. Now, when you come to the lower time frame, now we saw this impulsive ride over here. We saw all this ride over here. Now I'm seeing this one as a correction around this zone. So it should touch here. Look at this. So it should touch here, it should touch here, and it should touch here, right? Now, this is the zone that I'm expecting the fall to come. When this one was consolidating, I thought it was going to break up. Now our stop loss was around this level. So we gave it a breathing space and see whether around this zone, it will reject over here, okay? Because you see that there was a breaker here, there was a resistance level here, and I'm expecting to break around this level. Now the news brought it up to this level, which is not so much of a big significance over here. Now, when you come to this zone, so I'm expecting that now this was an impulse correction, break of market structure, retest. So I'm expecting to come down. Now, in the short term, I'm expecting that this one should form a harmonic pattern to the downside. So from here to here will be 61. So even in the short term, I'm expecting this one to fall, the dollar index to fall all the way to 78.6 to form a Gartley pattern here, this way. To form a Gartley pattern, which you will learn in the STR strategy course tomorrow. Okay, you will learn all this thing. Now, if you've not enrolled for the STR strategy course, the weekend session is starting tomorrow, so please don't forget to join. You can come and register at the premises. The weekend session is the classroom session, okay? So we are starting tomorrow at 2 p.m. and the last Smart Forest trading course, which is for the beginners and intermediate, will start at 10 a.m. in the morning. So complete it and just continue with the STR. So if you've not registered, please make sure you register. You contact the numbers on the flyers and you register. Now, so I'm expecting to hit a 78.6 level here, and that 78.67 level from the Gartley. Now, another way you can also look at this is that now, when it's forming a zigzag, zigzag means that AB equals CD, right? AB equals CD. So that means that when you do the ST, I will tell you that when you are looking for a zigzag, AB, normally you target the 1.0. So AB should be equal to, the AB should be equal to the CD, which will end at this level, which is 1.0, okay? So that means that the length or the distance from here to here should also be the distance from here, which should also be at a very good demand zone. Now, when it gets here, I will expect that a correction should be formed. The correction should complete when you see the buy move up. Okay, so this buy move that I saw with dollar, you see that there's been a massive retracement into the zone at which it started of the day. So I'm still expecting the dollar to be weak. So that's why I held on with the trades. So I'm still holding on with the dollar trade. Some have even jumped into profit, like USD CAD and the rest. They've gone back to profit. Some are in losses. So just apply proper risk management and focus on your plan. There is always an invalidation point. So once you calculate your risk, you put it at an invalidation point. When it gets, Forex is about proper trade management. So once you manage your trade properly, you are going to be consistent. You should know when your trade is invalid or when it's valid. Everything we did today was based on the DXY. So if the DXY fails, it affects our trade, okay? So let's be hopeful and see whether this zone will still, it will reject this zone, this breaker, this resistance zone, and this zone, whether it will reject it and drop back, okay? So once it rejects it, then we are going to see something like the pound USD. You see the pound USD. So we had the pound USD retrace a little. And it's coming. The worst thing that can happen to the pound USD is that it should form a triangle formation, something like this. It can form like this. Okay, it can form this before going, right? It can form this before going. Okay, so you should be careful about the pound USD. This can also form, or it can just form an ABC correction and retrace over here. The reason why I think it might form that is that, look at this level, this one. This one broke the previous support. It broke this level, this support here. That is why I'm expecting that the triangle formation can happen. So maybe the stop loss should have been at maybe around this level. Okay, around this level, which is 1.09990. Okay, 1.0990. I think that's the best place to put our stop loss. Okay, so look for your stop loss at 1.10000. Okay, so that's the worst that can happen to this one. Okay, when I place a trade on one, it replicates on all the accounts. So that's why you're hearing this out. Now, it can push from here and go, or the worst is that it can, maybe Sunday evening, it can push all the way down to this level before going, okay? So anticipate that it's possible, okay? Now, once it breaks, then that means that we are going to have another leg of this one. That means that we are going to have another leg up, okay, before we see the down move, okay. So that's it for pound USD. Now it will also correspond with the DXY, because the DXY the daily correction, we've not seen so much of the daily correction. It pushed out, so I'm still expecting it to drop. I'm still expecting to drop to this zone before any other move. Okay, so let's hope, let's anticipate that and add it to your plan so that you make an informed decision. USD CHF, so we called a sell over here, and you see, amazingly, it realized that the pattern had not completed. Okay, so it pushed up a little, and I'm still expecting, this one was a shark or cipher because the C leg went below this one. So it will be between 78 for cipher, which I was anticipating the drop, but I went to a shark. So shark is between 88 to 113. The maximum is 113 here. So within this zone, so that means that we can put our stop loss either to here. Okay, the stop loss should be either here. So within this zone, it can drop, or just within this zone, it can still drop. So just anticipate it, 1.00054. Okay. Okay. So that's it for USD CHF. So within this zone, it should be able to drop between here and 113. The drop will happen around this place. Okay, so let's anticipate that. Okay. Now we're also looking at USD CAD. USD CAD to this was looking like the DXY. Okay. Now the dollar, it was good for the CAD. The CAD news was good. Okay. So we should have seen a massive drop, but because dollar also went up. Now you realize that because dollar went up, that's why the CAD had a mixed reaction. The USD CAD had a miss, but the CAD itself was quite good. Now we had a flat correction. Okay, went up. Now break of market structure, retest. Okay, so we should expect the CAD to drop. Okay, USD CAD. Now let's look at, so we should expect the USD CAD to drop a little. Okay, and that's what is happening. That's what is happening. Okay, that's what is happening. So USD CAD is dropping over here, as you can see it. It's still dropping. So we're still holding on our USD CAD, we're still holding that trade. Now, the reason why we sold here was that there was an impulse leg. The break of market structure happened here. It happened here, okay? So impulse correction, impulse correction, impulse correction, impulse, break of market structure, which broke this level, ABC retest, PAM. Now, the target is that we are looking at the 1.0 fib, which is AB equals CD. So either 1.0, 1.272. So I'm targeting the 1.0 Fibonacci extension level here. Okay. So that means that I'm expecting the trade to hit all the way to this level. Then I'll see a buy move. Okay. So that's it for USD CAD. USD CAD, that's what I'm expecting. Okay. Now, okay, for Euro CAD, it fell. You see, I thought it would have gone up from here, but because of the CAD news, it's falling. So I'm out. I didn't even place this trade, actually. I didn't even place this trade. It was part of my buy setup, the long-term buy setup. I closed it. I think I closed it last week, this week or so. So, okay. So this is what is happening now. Here we might see an up move over here. Now it's forming a flat correction. Okay. So over here we might see an up move because it's either it's going to form an expanded flat correction over that means it will break here a little, then it will continue. Now, this expanded flat correction would give him for the buy to complete the cap. Okay, so it will be the cap, the handle, and an up move. Okay, so we should expect maybe an up move. So it will be here. Now this one might go up to this level. Okay, then we'll take the distance from here to here, should give us, so after the correction, that one too should give us maybe something like this. Okay, so it will go up to this level, then maybe a zigzag correction or something, anything, then it will go. Now, if it should form a zigzag, the distance from here to here, so it will be around this level. Okay, anything can happen. It can just come to, it depends on the length of the handle. Okay, it depends on the length of the handle. Okay. So let's look out for that. Okay. So these were the trade I was in, and I'm hoping that by Monday, Tuesday, we would smile the right-hand side of our lips. So it is what it is. Please, the STR strategy course, if you want to learn how to do harmonic patterns, you want to learn how to use Elliott wave advanced patterns. Okay. How to use Elliott wave advanced patterns, and also how to analyze charts properly with divergence and everything. So then enroll in the upcoming STR strategy course. We start tomorrow over the weekend, Saturday. We'll start a weekend session at 2 p.m. But before that, we'll do the smart forex trading course. Okay? So we'll do the smart forex trading course, and we'll do the smart forex trading course. We'll complete it in the morning. Okay, we'll complete it in the morning. Then around 2 p.m. we will start the STR strategy. Okay, so if you've not joined, please make sure you join. Okay. So it is what it is. Hope to see you tomorrow. Those who are not in Accra, those who want to do the online session too, the online version starts on Monday at 8 p.m. in the evening, 8 to 10, okay, Monday to Friday. The weekend session will start Saturday and Sunday, and next week too, we'll do it in the morning. Then after that, we'll go for the Infinite seminar. Then Sunday, we'll also continue, okay. It's going to be powerful. I want to bring good tidings of great joy over there, and we'll be looking at, I'll be giving you the brain behind how I see the market. Maybe some people want to borrow my eye. So maybe that day I would, dash you my eye that you can rent it for a while. So if you've not subscribed to the YouTube channel, don't forget to subscribe to the channel and smash the like button, press on the notification bell so that you'll be notified when I upload my next video. My name is Dr. Harmonics, your favorite mentor, and see you tomorrow at 10 a.m. and 2 p.m. the STR strategy course. Any question, please? If you have any question, let me know. Okay, I think when there are no questions, then I'll say goodbye and see you in the STR strategy course. I'm out.